So I plan to discuss two setups with us that could help us increase our win rates with AQZ. AQZ, obviously, a way of reducing, giving us direction in the market, right? So I want to use, but if you use AQZ and you are new to the chart, there is that tendency that you get lost when you get an AQZ H4PC, like what you can see on my screen, right? It seems to be happening in the middle of nowhere. This kind of PC usually will cause trouble for some traders, right? Something like this. Some traders might find it difficult utilizing it. And then no matter the strategy you use, AQZ inclusive, you must have a trade plan. If you can't fix your trade plan around PC, then how can we use the AQZ principle to frame a trade plan? So that's what we'll be discussing for 2 days, tentatively today and tomorrow, or today and some other time next week. Right, so I'll give us the lowdown of what we'll be looking at. So we will look at high probability setups, taking weekly liquidity sweeps. We will look at high probability setup, looking at currency futures. We've covered these two before. And then we'll look at high probability setup using break in market structure, right? So we'll be using these three. You most likely find out that number 2 can go with number 1, and it can also go with number 3, right? So Papa Pips and myself, even Doug, had mentioned on several occasions that if you're trading a Forex trader, you should concentrate on a minimum of, a maximum of, let's say, 2 pairs, right? If you are very experienced, maybe 3. You don't need more than that actually to be profitable, right? But now, notwithstanding, if you still want to hop around pairs and you're trying to look for a high probability setup, and then when you get that pair, then you focus on that pair for that week, then we'll be discussing these 3 patterns. So today we'll look at weekly liquidity sweeps, right? So the lime green line above and the pink line beneath happen to be the high and the low of a week. So this was the high of last week, so of the week before, and the high of last week is this. So I could practically put a vertical line here to delineate last week's high, low on this present week. I don't know if you get what I'm saying. I'll give you an example. This is the week on its own, right? This was the lowest point of last week, of that week. That was the lowest point. And notice how it was brought into the following week, right? The lowest point of last week happened to be this point, this particular candle, and the lowest point for last week. So that's last week's low. So it superimposes the previous week's low onto the present week and does the same thing for, if you easily get lost in the market, and most newbie traders would get lost, it's how the market is created to be. If you easily get lost in the markets, it will do you good to actually have a reference point, which is what PC does for us. PC gives us a reference point, somewhere we can start looking forward from and start looking backwards from, right? Now, another way you could apply the AQZ aside the PC or in conjunction with the PC is use last week's high and low. Traditionally, when you look at the charts, let me see if I can call up MT4, it might easily explain what I want to pass across. Just a minute. Let me quickly bring up MT4 here. And I'll be going down to the weekly, the H4. H4 will practically give me the weekly time frame. I want anybody here, any 2 persons or 3 persons to just drop a pair. Drop the name of a pair so it doesn't look like we're cherry picking. Drop a name of a pair, any 3 pairs.
GA.
Yes. Hello. All right. Drop the other pairs in the chat box. Let's take GA as an example. I'll be calling up GA right about now. I hope my audio is still on. So just
audio very good.
Just look at. All right, very good. So just look at my chart. Just look at the screen, and I want us to develop a model. I've developed it already, and if I can't give you everything tonight, I will definitely give it to you when next we meet. But I want you to see the model in your mind, and then if you happen to get the model, you'll be able to implement it seamlessly. Now, these vertical lines you're seeing delineates the start and end of a particular week, right? So from this dotted dash line to this dash line is 1 week, and this dash line to this dash line is another week, and you can see that like that, 1 week, because we're in the 4-hour time frame, right? This strategy practically works for even the 1-hour time frame to show you your days. If I go to 1 hour, you practically see 1 day, right? So I'm on 4 hours here. You can see the weekly time frames. Now, need you to watch something. I will scroll back and start from like first week in March, just for the purpose of context. All right, so we are in the first week in March, right about here. Right, so notice how there was a sudden, okay, let's start from here. Notice how they took out the previous week's low and then shot up, right? This is a trade, right? Let me clear this out. So back again. Remember, we're looking for patterns in the market, and these patterns may not present themselves every week, and which is why you focus on 2 or 3 pairs. When it does present itself, you should be positioned to take it, right? Look at the low of the previous week. It took it and then ran up, came back and took that same low in that same week again, and then ran up, right? This week, it practically did nothing. The next week, notice how they took out the high of this week, of the previous week, and then dropped. I don't know if you can see that. Again, notice how they took out the low of this week and then climbed up. As small as that move is 100 and something pips. Many people trading Forex, if you make 119 pips in a week, you are good. You are done for that week, most likely. Notice how they came back again, like the other time, took out the low again and then moved. Right? This contested the low, but didn't really take it out. No problem. Right? Notice how they took out this high and then dropped continuously for 2 weeks. Right? Notice how, okay, we now had a massive trend here. Notice how they took out this high of the previous week and then dropped. Notice how they took the low of the previous week and then pushed up. Notice how they took the high and then dropped. And presently, they are moving up, right? So in a month, you could practically get this setup like twice or three times, depending on how often it comes. And you are almost around the massive move. So once they took out this low, notice the massive upside. When they took out this high, notice the downside. For GA in this, you have so that it doesn't look like we're spending too much time here. So two persons mentioned GU, of course. Let's go to that. Pairs will usually be in a range for more times than they will trend. So let's watch this again. All right, we'll start from here. Notice how they took out the low of the previous week and then moved, right? Notice how they took the high of this week and then dropped, right? They basically did not contest the low. But this week, notice how they took out the low of the previous week and then went to the upside, right? This week, notice how they took the high of the previous week and they came down. Then there was a lot of range here. This low practically took out this. And then we started the trend to the upside. And after trending for some time, of course, price would range again. And you need a strategy that will help you trade whether you're in a trend and you're in a range. AQZ does very, very well trading in a trend. Most traders don't have issues trading AQZ in a trend. All you need to do is you draw your AQZ fib on the, I've mentioned this before, that if you're in a bullish trend, the bearish candles are your friends. So if you're in a bullish trend, you're always marking up your bearish candles. You're marking up your bearish candle, be trading away, marking up your bearish candles. As price come into them, you keep trading away from them. And AQZ does very good with that. When we get into a range, then people begin to get lost, right? So notice how it took out the low. Practically didn't really take it out, then move to the upside, right? Notice how it took out the high this week and then came to the downside. Notice how it contested the low and then you had that massive push to the upside. Notice how it contested the low and then you have a massive push to the upside. Notice how it took out the high. Then you had this, we don't know what to, of course, there's nothing massive about that, but right. So notice how it took out the high and then you had your drop to the downside. Basically, right? You could do the same thing for EA. See that it took out the high of the previous week and then dropped. And this week took out the low of the previous week and rose. Sweet trade these 2 weeks, right? Very sweet trade. Notice how this took out the high of this week and then melted to the downside, right? Notice how this also took out the low and moved. So what am I trying to establish here? There is liquidity seated on the weekly highs and lows. Notice that, took it out and then dropped, right? Took it out and then dropped. You find them, 2 times, 3 times a week, depending on if the pair is trending or ranging. If it's trending, you practically won't get that. And of course, your AQZ fibs will do well. You just draw your fibs and then you wait for price to come back to the PE and then or to the AQZ block, and you keep taking your trade in the direction of the trend. Here we are on TradingView, and you could also have last week's high or low on your MT4. If you choose to trade on MT4 mobile, you could practically just go to the weekly time frame, right? So just go to the weekly time frame like this on your mobile. Go to the weekly time frame on your mobile. Each candle here is 1 week, right? So you could just practically draw. If I had the line on that bullish candle, then I come back to 4 hours. Right, I'll see that price. See, I was trading on my mobile, it's traded into the previous week's high, right? So it's something easy. We have a high and low moves that are potentially massive in nature, right? So once the week opens, you're waiting for a candle in the present week to contest the high or the low of the previous week. You're waiting for one candle in the present week to contest the high and low of the previous candle, of the high and low of the previous week. So you notice here, the week opened, and then we have this candle, the bearish candle, practically touching the high of the previous week, right? So once I see that, you can set alerts on your weekly high and lows. If you are using TradingView, you could set your alerts on weekly highs and lows on your TradingView also. This is a weekly high and low on TradingView. I can practically go there and just add an alert on my weekly high and low, and it's going to set an alert for me and tell me when price and notify me when price bridges my weekly highs and low. Once price has breached my weekly high and low, I could do either of two things. Number one, I could look for the AQZ qualifying candle at my high. So in this instance, I could use the candle of last week and the candle of this week. If I'm not too comfortable because it doesn't look so much as a bearish engulfing per se, I could decide to use the inside bar I see here. So practically, I could do two things. I could fib the bullish candle of last week, right, into this. That gives me the bearish engulfing AQZ qualifying candle, and I'm waiting for a decision to be taken outside my box, right? If it breaks out, I will be thinking of a continuation move, in which case it will be a bullish trend starting off from last week. If it breaks to the downside, then I'll be thinking that they've taken out the high and then now they want to go to the downside, and I have the opportunity to catch the whole of this move to the downside, about 100 and something pips, right? That is one way we could do it. Now notice these two candles, right? The bearish and the bullish, those form another AQZ qualifying candle. So I could actually do that. And that gives me practically the same thing with what we had before, right? Now, another way I could look at this, once price breaches my high, once price breaches the high of the previous week, I now drop down to 1 hour, right? Once price breaches the high of the previous week, right about here, I then drop down to 1 hour and do exactly what I just explained now on the 4 hours. So in this case, we have an inside bar, and I'm feeding this to the downside, right? So you see, this one gives you a slightly more sweet scenario. So I'm looking at selling from my 1 hour price trade into this region, broke down my retest, and I move, right? I will only be thinking of buying in this case when price breaks above my block. Note that. That's when I'll be thinking of buying. I won't be doing validation, invalidation in this case. When price breaks above my block, I'm assuming they will continue to move to the upside, then I'm now bullish. In this case, my bias is strictly bearish because I'm anticipating that they will take out the weekly high of last week and then drop. But if they take it out the other way and close above my box, then I know we might be bullish for that week. Remember, we don't practically know anything. We're trading probabilities here. So I had that drop, right? It came back the next day. I'm going to take my sell, came back, did close above, sell, then it sold down. Right, so when it comes, the very first candle that seems to have breached, the very first candle that seems to have breached the last week's candle, then we had this. Not so much. I don't like that doji or hammer. It all depends. If you like it, no problem. We could use it as an inside bar. Then you'll be feeding this, right? So if you do that, you have an early start. Price broke to the downside. You could be thinking of selling, and then price went above. Now your bias is completely changed to bullish. Your bias is completely changed to bullish, and then you just simply repeat the same thing. I'm looking at my bearish candles as I go to the upside, and I'm taking my trades to the upside using my bearish candles as I go. You can see all the trades would have gotten up until it got down to last week's high, or we started from the weekly, and it gave us a bias for this week of being bullish until it arrived close to previous week's high. We could also do this like we said on 4 hours. So I can remove all these drawings and then go back to 4 hours. Right? So here is my AQZ qualifying candle on 4 hours. I practically draw this to the upside, right? So there you have it. Here is the retest, and boom, there we go. Sorry. You possibly could have made about 125 before price got last week's high. Remember, you want to have what you drew up for last week there, right? Price practically week's high, and it's a sign of rage. So that is one you could do this weeks to price trade. You see qualifying. Notice how close above then, but until that happens, right? So price this week traded into the previous week's low, but no AQZ qualifying candle. It traded down, no AQZ qualifying candle, and then traded down, no AQZ qualifying candle, and finally gave us a bullish AQZ qualifying candle with a bullish engulfer. So what do? We practically just fib out this, and then we have a bullish bias for that particular week, and then price traded its way up, right? You could use the ladder, you could use the golden ladder. If you're to use the golden ladder, you just practically have your AQZ feed. The internet is a bit weak right now. Okay, there we are. So if you use your AQZ feeds without stop horns, here you are. You never really had a retest of your originating block, but notice we are using the ladder. Every close and retest of the AQZ ladder, A1, A2, A3 is a possible trade. So it broke above, retested, you are buying, right? You get out from here. It broke above, retested, you are buying, you get out from there. It's as simple as that. Then you get a bearish engulfing. You get a bearish engulfing. The bearish engulfing is another AQZ qualifying candle. Once you get a bearish engulfing, your bias changes to be bearish. Every other candlestick pattern that isn't a bearish engulfing is practically a continuation pattern, right? I'll show you an example of what I have. Let's wait for the internet slow. We need just entry fibs. The idea here is that you are able to sometimes this to right, then or a bullish engulfing, depending on what side you are trading, then you know it's time to switch. You are having a midweek reversal and you just move, right? So this week, you had a bullish engulfing. I've mentioned how you could trade it in terms of the ladder. I'm going to I've also explained in passing how you could trade it in terms of every bearish candle. So notice this is a bearish candle, you feel this. It went up, came back, you move, right? The next bearish candle is this. It went up, it came back, you buy. The next bearish candle is this. It broke out, it came back, you buy, right? But you determined your bullish bias from here. When you bought, you suddenly got a bearish engulfing. A bearish engulfing is like the word say, a bearish signal. So it means you're done for the bull for that week. You simply reverse your fib and you're going bearish now. It broke, it came back, you sell. And then you move to the next bullish candle. The next bullish candle is this large one. Again, see that? It broke, it came back, and then you sold. And you're done for the week. You practically traded it up and then traded it down. The same thing happening this particular week. So this week, for instance, now, very, very sweet one. I caught the move to the upside, and then so I and some of my other guys, we got this move to the downside. In fact, somebody posted this on the AQZ discussion group. You just straight upside, then yeah, but let's say you didn't see that you will now be feeding this. I like your offering broke it down, going down, right? You could do that, right? To just another pair, and we look at that for around gold, and I have tried this on gold. Who says we can't try it live now? Let's give it a try and see how it works.